welcome to today's episode of Don't Waste the Chaos. I'm your host, Kerri Roberts, and I'm thrilled you've joined me. As a continuation of last week, where we focused on real estate, today we're going on with some money chat with a special guest, Allison Carney. Allison is the CEO and founder of Domino Bookkeeping. She started her boutique firm almost 3 years ago after leaving the corporate world in early 2019 to be a stay-at-home mom. She has a well-rounded background that allows her to provide guidance in multiple facets of business. This is an interesting one. She received her bachelor's in psychology, went on to get her MBA, followed by her master's of accountancy after working in various industries. She spent 5 years in audit, primarily in real estate, but also worked in audit in manufacturing and insurance. While she loved the travel that came along with the audit world, she later transitioned to corporate accounting when she was ready for a change. Like me, Allison always knew she wanted to be a mom and wife first, but also needed something of her own, and she knew she had a lot to offer business owners, so Domino Bookkeeping was born in 2021. She started by offering bookkeeping services, but quickly realized small business owners needed more than just compliance. They needed guidance on how to read and understand their financials, and I see that all the time. So because of this, she began offering fractional CFO services about a year ago and has really found her groove, primarily working with real estate and service-based clients. On the personal side, Allison has been married to David for 8 years, and they have 2 boys, Dominic, who is 5, and Nolan, who is 3. They lived in Chicago until 2020. And they made the decision to move back to St. Louis to be around family. She loves to read and travel, and her guilty pleasure activity is building Legos. Interesting to me, Legos were like the bane of my existence with my son. So when I saw that, I was like, oh my gosh, Legos. And she also loves listening to audiobooks and podcasts. So would you please give Allison a warm welcome, and to Don't Waste the Chaos. So Allison, let's jump right in and provide our listeners with some value today. So can you share some common misconceptions or overlooked areas in finance and accounting that you see with small businesses?
Hi, Kerri. Yeah, thank you so much for having me, first of all. And of course, the very common misconceptions is that small business owners just don't need a bookkeeper or an accountant. They think that they can just gather all of their receipts and hand them over to their CPA or tax person at the end of the year and say, here you go, and all is well. People also think that bookkeeping is just data entry. Anyone can do it. Or I know math, so I can DIY it myself. Side note, I'm not a math genius. I use a calculator. So it's really a lot more than that. And those are probably the top things that I see and hear all the time when I talk to people about what I do.
That makes sense. I've had a client recently that has cycled through a couple of different folks in this role. And that's mainly because when she posts the position, a lot of people are like, I can do that. And you're right. I see the need for specialized skills very regularly with my clients. And I'm always recommending that they find a fractional controller or fractional CFO when they're really ready to dig in. And really, that should come at the very beginning. So what are the primary benefits that you see that a small business can gain from engaging in fractional services or using an accounting professional?
So most small businesses understand the need for a CPA or a tax professional because they're not going to mess with the government and taxes and all of that. But what they don't understand is how doing your books throughout the year and staying informed throughout the year is so beneficial to making those sound financial business decisions. So really the primary benefits is just bridging that gap between throughout the year and then when you hand over everything to your tax professional. Also probably even more important than that is just actually being able to use your company data to make those sound financial decisions. You don't want to look back at last year once you have those numbers and be like, oh, I could have done this, or, ooh, I shouldn't have done that. You want to say, I can do this, I can do that, not should.
Yeah, I agree. And being a small business owner myself, it's isolating sometimes, or it's lonely. And I think when you have that fractional accountant, that fractional CFO, that fractional controller, you've got a partner in your business. You're paying them a monthly rate or whatever that is. But one of the big values I see is you've got somebody to talk to about the decisions that you're making, outside of your spouse. And a lot of times you don't want to, talk to your entry level employees about that. And so it's truly a partner in your business. I see a ton of value in that. So how does having access to that fractional finance accounting expertise contribute to the growth and success of small businesses?
Well, I think you really hit the nail on the head in using the word partner, because that's really what it is that I offer. I know in my business, like you said, it's hard for me to talk to my husband because he's in that corporate world and it's a little different. So I'm here to really talk through with my clients about what might make sense, what not. I'm not here to make the decisions for you. You are the CEO of your own business, but I'm here to provide you with the data that you have. You just don't know necessarily how to understand or manipulate in a way to make those decisions. So having access to a fractional CFO really helps make small but noticeable changes. So I will take, as soon as I have, let's say, January's financials done in February, I'm meeting with my clients that have my CFO services, and we're talking about not just our balance sheet or our income statement. We're looking at a variety of cash flow drivers, profit drivers. I have this awesome spreadsheet that has a whole what if column. So what if we want to hire someone, or what if we want to do this type of service or this product in our lineup, and we can punch in some numbers and see how that would affect our financials and our bottom line. Can we afford to hire someone? We can type all of that in and see what those outcomes might be. So really, I'm partnering with you to help you make those decisions that typically, prior to these fractional type services being available for small businesses, you had to tough it out on your own. You hear all the time about most small businesses don't make it past that 5-year mark because you start your business because you are passionate about what you want to offer everyone and not everything else around it. And so once you get to that point where you have a big full-time CFO on board, you're okay, but you have to get to that point first. And so offering those fractional services really helps the small businesses have more of a chance to get there.
Gosh, I love that you asked the questions. I think a huge value in any fractional service, whether it's HR that I'm doing or finance and accounting, what you're doing, it really is a lot of times asking the client the right questions and then giving them the time and space to think about it. I mean, I'm not trying to oversimplify what it is that we do, because there's a lot of grind work that goes in the background as well, but caring enough to ask, knowing the right questions to ask to help go in the right direction. I spent time in insurance, and I know you did too. And one of the things that I saw was a lot of insurance advisors were transactional. They would wait until their client would say, I added a vehicle to my fleet, or I hired a new person, or I'm going to open up a new location. And what I felt like should happen, and what good insurance advisors would do, just like us in a fractional option would do, is sit down and say, okay, so what are we looking at this year? What are we trying to do? What are your goals? If you exceed your top line revenue by X amount, what are you going to invest in for the year? If you had extra space financially, what would you want to spend that on? Do you want to work toward getting that? Do you ever want to bring in any partners? There's all of these questions that we can ask. And then the cool thing is, on the background, there's work to be done that, you can do and I can do to help support, or an insurance advisor could do to help support. But it's really knowing those right questions and taking the freaking time to do it. A lot of people just want to wait and process and transact, but a good advisor, like what you're talking about, a good partner, is going to step in. And I love how you're talking about that. For you, it's probably simple financial modeling, but for a small business owner, figuring out how that's going to impact their bottom line if they added a full-time person or a part-time, or the difference between hiring a W-2 and a contractor and all of that, you being able to kind of simply pop that into the financials and then spit out at the end what the implications are going to be. that saves a business owner so much thought and so many things that hold them back, that you help them see like, hey, here's your opportunity. So I love that. I love that you're doing that. That's huge. So can you provide examples of specific challenges or issues that small businesses may face without proper financial management or oversight?
Sure. So we've already kind of touched on like the big one, which is not knowing what your business can or cannot afford, hiring, pricing, marketing, all of those things, HR. And so with my CFO clients, what we do, kind of piggybacking off of the last question, is we sit down. Now, if it's an annual thing. Part of the process is like, so in January, I will meet with my clients, or let's say you join my CFO service in July. So we would do this in July at the beginning. We set down goals and targets. What are your business goals? What are your personal goals are very important too, because success to me is different than success for you. So I need to know, like, what does success look like for you? And we talk about targets. So then that's where we kind of do that initial, like what you were just saying, what are all these things that we're going to do this year? And we need to be very forward thinking about it instead of what people typically look at with financials in like it's just looking in the past. So not knowing what your business can or cannot afford is a very major challenge. Also, because I specialize in real estate, there's a lot of buying properties, and with that, there's loans. So I will have clients say, hey, my lender needs my profit and loss statement, but for this time frame, can you provide that for me? So if your financials aren't in order, you can have a lot of difficulties obtaining loans. Not understanding your cash flow. So if you know that you're collecting a bunch of rent, but it's not hitting your bank account until the 7th of the month, don't have a bunch of bills that are due on the 3rd of the month. So
Yeah.
There's we could go on forever about various challenges. But I think those are probably the top 3, although I will kind of sneak in with the cash flow is taxes. People get surprised by their tax bill at the end of the year. So that's a major thing to be thinking about and setting money aside for.
Yeah, that can actually be proactive. Isn't that magic? You can kind of determine how much you're going to pay or not pay. Yes, that's all good. Okay, so what motivated you to pursue a career in this area, particularly focusing on small business? Like, how did you determine from going from, psychology to now, what did this path look like for you, and why did you choose it?
So, I could go way, way back. And so I got my bachelor's degree in psychology. I minored in business, so I didn't kind of just start my MBA out of nowhere. But I actually worked in a residential treatment facility for teens with trauma and attachment disorders. Reactive attachment disorder is very common in children who spend the early years of their lives in foster care or in orphanages. So a lot of the kids that I was working with were from Ukraine, Russia, and so they were adopted. But when you're not touched enough, basically, as a child, that can cause a lot of issues down the line. And then also kids who are adopted, they think about, oh, well, you're not my mom. You won't love me if I do this bad thing. And so they end up coming to the facility, working with various therapists. And so I was a staff there. I did a lot of recreational therapy with the kids. So I got paid to go wakeboarding and biking on the Katy Trail and camping and all of these fun things. I learned how to fly fish. So it was really fun, and but it was really hard. You can't just leave work at the office and come home. Very draining. I knew that I wouldn't be able to continue down that path. So I went back to school, got my MBA because I didn't know where I wanted to focus. I loved accounting. It's always been, I come from a family of bankers. So then I decided to get my whole second master's degree because I wanted to be eligible for the CPA, but I ultimately decided that I did not want to sit for the CPA. That's another common misconception I probably could have noted, is not every accountant is a CPA, nor do they need to be. You look at a lot of W-2 job descriptions and everyone wants a Big Four accounting firm history and a CPA, and those things frankly just are not necessary to be very successful and knowledgeable in this area. So once I decided that I wanted to, went through all the corporate, did the audit, all of that stuff, came back, was like, okay, I can't just be a stay-at-home mom. I need to be doing something, and started offering the compliance, the bookkeeping. I would meet with my clients on, a monthly basis. We'd go over their financials, but I almost immediately noticed how they would ask me all these questions around their financials. Some of my clients understood them, some did not, but I could tell that they needed that like more future thinking financial partner and not just like looking at the past. So I was like, there's something that needs to be done here. And so I did some research. I joined a program to kind of learn the best practices for fractional CFO services and gone from there.
That's awesome. I love that. And I love a person who will pivot and change versus staying stagnant. So I love that. I love that path. And I am super interested in attachment styles. There are a couple of psychologists that I follow their podcast and listen to those. And it's amazing. Listeners, if you have not done any research on attachment styles, it is well worth it for you to learn that about yourself and then learn that about your children as well. And then do what you can to make a positive impact on that. So that's huge. I could listen to you talk about that stuff all day. Okay, let's jump back in. So how do you tailor your approach to meet the unique needs and challenges of small businesses in terms of your accounting work?
The number one thing for me is approachability. I have heard, and it just makes me sad, I've heard so many stories of people meeting with generally in the way that it used to be, you just go to your tax person at the end of the year, here's my receipts. And that individual will talk to them like they don't know what they're doing, or they will use big accounting jargon words that, most people just don't understand. And so that's not helpful at all. So I really just want to be approachable. I focus a lot on explaining things in a way that the client will understand. And I always ask, does this make sense? Because I don't want to move on to the next thing. If I said something that they are confused about, I want to make sure that they understand. And if they say, no, I'm still a little confused on this piece, then I will re-explain it in a different way. I'll use silly analogies a lot, whatever makes the most sense at the time. And then the other way that I've tailored my approach is really specializing in a certain area. Most people think accounting's black and white. It is such a big gray area most of the time, and every industry has their nuances. And so if I can really specialize in a few areas, one or two areas, then that can really help me meet the needs of those clients because I know that area back and front.
I agree. And that also, in my opinion, lends itself to being a confident human being. So when you try to be everything to everyone, a lot of times from a small business owner perspective, that comes because we're afraid that we're not going to get enough clients and so I love that you're confident enough in your abilities that you're kind of niching out here so I can be really, really good in this area and bring the most value. So I really appreciate that. So in your experience, what are some of the common pitfalls that small business owners encounter when they manage their finances independently? I know we've talked about this a little bit, but when you pick up a business owner that has only been, just working with a tax professional and no one else throughout the year, what are some of those main pitfalls that you see when you first pick them up?
I noticed, so most of my clients are on QuickBooks Online. Actually, all of them are. And so I will gain access to their QuickBooks file and I will come in and kind of see where they've been categorizing things. This kind of goes back to earlier in our conversation, how they think, oh, well, it's bookkeeping's easy. It's just data entry. We can plop these things in these buckets and all will be well. And so then when you come to look at your financials, well, if you have been putting your marketing expenses not all in the same marketing bucket, you can't even tell what your marketing spend for the year is. Another big one is for single member LLCs who might not be an S corp or on payroll, when they pay themselves, they will put that on their income statement as an expense, as a payroll expense. Really, that belongs on the balance sheet under an owner draw. So that really affects your net income. So it's just the main issue is not knowing where it should go. And that can cause a lot of problems.
Yeah, and I would say actually, that's how I found Allison. So when I'm working with my clients, a lot of times we'll be talking about, like, for example, how much are you going to spend this year in performance review based raises? I'll say, like, okay, COLA, cost of living adjustment, is around 3.8% in the US this year. And so what do you have bucketed? And I'm not doing it to be sarcastic, and it's not like I'm trying to poke holes, but what I almost always know is the answer is I'm not sure. I didn't really have money allocated for that, but I do raises, and I always want to pay my people, and I love that, but it's just so reactive, and it makes me nervous because HR usually is a cost center that individuals aren't allocating funds to, and so therefore they're also not valuing it. And then their employees feel that. And so, I could riff on that all day long of how much you need to, like, have a line item for that, because that actually is your biggest expense, your payroll and benefits usually. It likely is. And so that's how the conversation will start. And I'll say, all right, let's jump into let's see your P&L. If you don't mind showing it to me, let's take a look at your P&L. I've been a COO for years, so I'm very comfortable in there. So let's take a look. And I just want to see what your percentage to budget is on your payroll and benefits. And then usually I'm like, okay, and here's your marketing spend, and here's all of your buckets. And the same thing starts to happen. We're digging through their P&L, and they'll say, why is that there? Well, that's stamps, but then I noticed, like, my shipping is in another, so that's in office supplies, and then this other one's in postage. And I'm like, hey, whoever is, whether it's you or someone else, business owner, we need to get strategic here, because how are you ever going to say, okay, next year, I expect to see a 4% increase in this area, a 10% increase in this area. What is the increase on top of, if you don't know where the budget's sitting? And I'm not, like, mad at you, let's do this. But what I usually end up saying is, this is where I would love to drop you off at someone else's house. So I want to stay in that HR people ops lane. And while I'm comfortable reviewing your P&L, I think you need a strategic partner when it comes to finance and accounting. And you need somebody who can talk to you about your industry, the best practices, the benchmarking on what percentage to budget you need in each of these buckets, and then how to have a systematic approach moving forward to where you feel like you've got a grip on your money. And so I did a quick search and was looking for other fractional, like, CFO controller services in the state of Missouri I can connect with. And that's how I found Allison. We got on the phone and I was like, yes, okay, we are one of the same mind here. We're just trying to help and bring value to small to mid-sized business owners. And I want to stop where I need to stop. And I want you to start where you want to start. And so that whole, when she was just talking about, like, not even bucketing money right, that's why, like, we can't figure out where you're going next year, or what, in my world, what you can allocate toward raises. Or let's say somebody comes to you and they're saying, I'm going to leave your organization, I've got this other job offer. Well, can you afford to give them an $8,000 increase? What does that change? And does that mean you need to do a promotion? There's a lot that goes into it. I want to advise on the people part, but you need a financial partner to talk to you about long-term implications and how we can model this out into the future, because you need someone who can tell you, oh, you're wanting to retire in 8 years? Here's how we get there. Here's how your top line revenue and then your OPEX impacts that. And here's where you're trying to go. So I love that. I love that you come in and kind of start with that audit and clean all of that up and set them on the right path moving forward, because that is key. And it's so easy to just run your business. And I get it. It's busy. You're running your business, you're doing client work, or you're selling your products or whatever that is. And you just don't work in this foundation. So hire a fractional professional and they'll work in this area for you. So I could preach on that all day long and the value of it. Okay, so can you elaborate on the role of tech? You talked a little bit about QuickBooks Online. Talk about the role of tech and automation when it comes to accounting solutions for small businesses.
Sure. So yeah, QuickBooks Online is wonderful. I generally have a love-hate relationship with it. But tech and automation in general, it really allows us the time to focus more on the accounting aspects that help the business owners make the future decisions rather than just looking in the past. So a lot of automations that I'm seeing come through, I just added a Chrome extension to my QuickBooks file this week, and it completely free. And it's just shaving seconds off if I want to go into a bank feed and then I have to click 3 times and it takes like 10 to 15 seconds to actually get to where I want to go. Now this automation, it sits over here and I can just click bank feed and it goes there immediately. So it's just little things like that I see coming through automating. There's also more robust automations where you can kind of really set rules. If you have the same vendor that is always the same, like let's say this person is always marketing, then you can have that auto go into that bucket. I'm very hesitant to do that automation because a lot of times I find that either an expense needs to be split. So you have a total of, let's say it's $500, 400 of it needs to go in one place and 100 of it needs to go in another place. So I like to see some of that, but being able to focus more on those future financial decision-making things, tracking various KPIs, stuff like that wasn't available before, at least in the way that it is now due to technology. We're able to do a lot more, a lot faster. So instead of waiting for someone to do a manual calculation, you can just run a report, drop some numbers in, and you can start making your decisions and getting on with your day.
Do you ever have any clients come to you and all of their financials are in Excel? They're not in a system?
I have had that. I actually just did, I think maybe in January, I met with someone. So she is pretty small, had her full-time job, and she did this on the side, and she was tracking everything in Excel. And so I basically took that and created her QuickBooks online file and went from there. But she was pretty organized for being in Excel, but you can run a pivot table. You can do a lot with Excel. Excel is amazing. I love it. I use it most days for certain things, but it's not going to give you everything that QuickBooks or another accounting software can give you.
Yeah. And I asked that question just to tee up. So if you're at the place in your business that you're like, oh my gosh, I've been doing this manually and I want to get into a system, but like doing that myself on top of running my business sounds really hard. A fractional CFO can do that for you. So, Okay. So what advice would you offer to small business owners who are considering outsourcing their finance and accounting functions for the first time? What should they be looking for when they're, like starting to weigh the pros and cons out for this?
I mean, really, when was the last time you looked at your books? Because the number one thing that I hear is, it doesn't take a lot of time. It's fine. I can do it. But then I say, well, when did you do it last? Oh, I haven't done it this year yet. I did it in January of last year because that I needed to get the stuff over for my tax person. Okay. So maybe we need to come in and take a look. But some of finance is one of those very emotional areas. People always tell me, I am afraid or I am embarrassed for you to see the state of my books. So I always say, don't be afraid. Don't be embarrassed. I am not judging you. Also, I have always seen worse. Like always, I have seen worse. And really to prepare yourself for this, like coming together with an accounting professional, is be prepared to be vulnerable. I mean, your finances are very personal. Even if they're business finances, those are very personal to your business. And you have to be ready to just be really honest with yourself and your partner in this. We're not judging you, and we're really glad that you came to us for help, and we really want to help.
You're reminding me. So a lot of, similar to your background, Allison, a lot of small business owners were likely professionals that were highly successful before. And sitting in my executive seat and shareholder seat before, and then stepping out into my own, I probably had a little more confidence in myself than maybe I should have as an entrepreneur, because I felt like I was a stud in the business world. And I did really well. But when I stepped out to start a business on my own, there was so much that I didn't know. And being an entrepreneur is just such a different vibe. And my first year, so I launched in April, and I did not pay myself. And in December, the fractional controller that I'm working with was like, "Are you going to take a distribution?" And I was like, "Oh, I didn't know like what I should do." And I also was a sole proprietorship LLC, and I was pivoting over to S Corp, which I did in January. And I didn't know like what all that meant exactly for me. I knew that starting in January, I was going to start paying myself. And so that whole first year, I didn't do it. I didn't pay myself because I felt nervous. And I love when somebody says like, it must be nice to, like be married to a spouse where you can do that. My husband also went, full like mortgage loan officer, working from home, had started a new business and was getting his own leads. And so it wasn't because I had a giant safety net. I just didn't know what to do. And I was trying to set up a business for the future. I knew the first year was going to be hard. I knew I was going to be taking a big step back. And I was looking at what I made, and I was like, well, I have money in there. I had plenty in there, but I just didn't know how much I should keep for the next year. I knew I was taking 2 1099s over to W-2. Granted, they're both part-time, but I also had a marketing team that I was working with. I knew I wanted to buy some technology. So I was thinking, I didn't even know if I could take any of my own money. And she laughed. And, long story short, I took a $40,000 distribution. It certainly wasn't all that was in the account, but she was like, "Okay, let's set you up for 6 months to a year worth of OpEx. So let's leave that in there if you can. And then here's what your distribution can be." And I was like, okay, that feels so good. And, could I have figured that out or done it? Like, sure, I could have pulled money out myself, but I didn't feel confident in what it was that I was doing. And her doing my financial modeling with me helped me to say, I can. Like, this money is okay for me to move out of this account into my personal account. And so, like, even though I feel like I'm a very bright woman and very strong in money, I still I leaned really hard on her to tell me that it was okay at the end of the day. And that was vulnerable. It felt like I felt a little silly at the end of the conversation. I was like, oh my gosh, like I hadn't paid myself. That's really funny of me that I was like so nervous, but it was a vulnerable conversation. And I'm glad you bring that up. And I do think it's interesting with your background. You're probably even a little more, open to that like personal connection to the business and how that impacts a person psychologically when it comes to these conversations. So I love that you bring that up. And if you're a small business owner listening and you're like, I didn't have the year that I wanted to have financially, like that's okay. That's nothing to be ashamed of. Like, let's get it in order and find a partner who is aware of the fact that that is hard for you, and they can, show you grace through the process and guide you in the right direction. So I love you bring that aspect up because it is personal. I get it. It's business, but it is personal.
Yeah.
Okay. Let's get your crystal ball out. Let's get your decoder ring out. How do you see the landscape of accounting services evolving for small businesses in the next few years? Like, what opportunities are you seeing?
Well, as an accountant, in order to look to the future, I do look to the past a little bit. And when you think about small businesses, even just 10, 15 years ago, you really just took your stuff to your neighborhood CPA office and said, here you go. Nowadays, especially post-COVID, but it could have been like this pre-COVID, I just wasn't in the space yet. I am seeing so much specialization, niching down, well, we touched on this earlier in that, your neighborhood CPA office, they're being pulled in every direction. They need to understand every industry, everything, and you're just not going to get from that what you might really need. And so I see further niching and specialization and the ability to reach, whether it's across the state or across the country, across the globe, finding the right person to really help you with that. And so also piggybacking off of that, business owners are going to have more success as they realize the financial wins that they get from partnering with someone who understands their numbers as well as they understand their core offering. And so that is going to really get them past that 5-year mark of having a small business. As for further opportunities. I think we really covered a bunch of that already in our previous conversation. It's just really finding that person. And as we're able to find the person that's right to work with you in your business, you're going to be more successful.
I agree. Okay, we have covered a lot of different areas. Anything else you'd want to add for my listeners before we wrap up?
I don't think so. I think we've really covered a lot. I get really excited to talk about this type of stuff, if you can't tell. But I think it's great. I'm glad that you have been able to recognize like the very personalness of a business and how important that is to just be vulnerable and be open to sharing.
Yeah, absolutely. Okay. So let's say one of my listeners are like, oh, I'm connecting with this person. Like she would be a great fractional CFO for me. How do they find you?
I have accounts on pretty much almost all of the social media platforms. I'm on Facebook, Instagram, LinkedIn. I also have a website, and I just launched earlier this year an ebook that you can pick up for free if you're. It's written for real estate investors, but it has some good information in it for anyone.
Okay, great. I think most of us know a real estate investor. And so here's what I'm going to do. I'm going to get those links from Allison. I'm going to put them in my show notes. And so you can find links to all of that, how to connect with her and that free ebook in my show notes. Allison, thank you so much for the value you brought today, the humanness you brought today to this daunting world for some folks. I've loved having you on. Folks, thanks again for listening to another episode of Don't Waste the Chaos. We know that money can feel like chaos. We know that the economic state of the United States right now can feel like chaos. Don't waste it. Embrace it. Find a way to thrive in it. Until next time.